Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Sofi Technologies SOFI stock and Palantir Technologies PLTR stock. Today we're going to be talking about how the Biden administration will announce this week whether or not they will be extending the student loan moratorium and the student loan freeze. We're also going to talk about Sofi Technologies financials, price targets, and latest news updates, as well as what smart money is doing with SoFi stock, and one hedge fund in particular has actually made SoFi their 27th largest position, which is actually very aggressive for such a hedge fund. And then we're going to move over and talk about Palantir Technologies PLTR stock and why this particular author is very bearish and negative when it comes to Palantir Technologies, and I want you all to be aware of the risks that he actually points out in regards to this company, because he thinks the company is actually worth $2.50. That's his price target. Of course, we'll also be going over what investors and stock professionals think regarding Palantir stock price predictions. And then lastly, we're going to talk about another hedge fund that has actually started to buy up Palantir. So for more news videos on Sofi Technologies as well as Palantir Technologies, remember to go and smash that like button right now. Comment your thoughts down below about Sofi or Palantir. Subscribe if you are new. And without further ado, let's just jump right into today's stories. If you didn't know, Sofi Technologies is a fintech company or a financial technology company that operates basically as a digital bank. They give their customers and consumers anything they could probably need in terms of financial services and or financial products through a digital app. Right now, the SoFi stock price trades for $6 per share. However, stock experts think that the company is worth anywhere between $7 and $11 over the next 12 months, which could indicate that currently, right now, the stock price could be undervalued because of its recent pullback, but we will talk about that later in this video. Right now, SoFi shares are in the eyes of many investors, especially after the education secretary has stated that the Biden administration will come to a decision on whether or not they will be extending the student loan moratorium this week. However, it's been extended ever since it began back in March of 2020. The education secretary goes on to explain, and I quote, "We know August 31st is a date that many people are waiting to hear something from. We have been talking daily about this, and I can tell you the American people will hear within the next week or so," end quote. Now, personally, I think that it will be extended, and we will get into why I think that later in the video. However, right now, I want to point out that around 38.44% of their Q2 lending products were made up of student loans. So whenever the student loan moratorium does end and the student loan freeze stops, where people who have student loan debt will actually start to need to make payments and it will start accruing interest, this is going to be a very positive catalyst for Sofi Technologies in particular, because this is one of the things that Sofi Technologies is actually known for. Furthermore, the student loans actually account for around 12.44% of the company's total origination volume, offset with things such as personal loans as well as home loan offers. On the flip side, if the student loan moratorium is extended, which I think it will be for the 7th time consecutively, this will not benefit SoFi in terms of their financials, and it's going to weigh down the SoFi stock price, at least for the short term, until a catalyst will come along, such as the student loan moratorium ending, to increase the stock price again. Student loan debt across the country is estimated right now to be around $1.7 trillion, which means that around 45 million borrowers are in debt right now in terms of student loan debt. This would equate to the average borrower having around $48,474 worth of student loan debt. Now, in my opinion, I would advocate for people to start trying to at least refinance their debt right now while the student loan moratorium is still enacted. And why would I say this? Well, because one, you want to jump on this before interest rates continue to increase, otherwise you're not going to get a good deal if you decide to wait. Secondly, if you do look into various options for student loan refinancing, you can look at Sofi Technologies, but I think using something like a credit union is actually going to get you the best rate that you could possibly get. However, feel free to shop around. That's just my 2 cents on the subject. Another thing is that the Biden administration and President Biden himself is looking to forgive around $10,000 worth of student loan debt. However, this has not been fully confirmed confirmed as of right now, and I personally don't think that's going to happen. I think it's just talk, and it will never actually go through. The article goes on to say that it's very likely that the Biden administration will extend the student loan moratorium, and I 100% agree with the author of this article. I do think the student loan moratorium will be extended, mainly for political reasons, and that's exactly what this article highlights. The reason this would be beneficial to extend the student loan moratorium, at least from a political standpoint, is because if they extend it, the new deadline will likely fall past the midterm elections around November 8th. Forbes even chimed in and reported that if the student loan moratorium is extended, the new deadline for when it ends will probably be either December 31st or January 31st, and I personally think it's going to be between January and March, so I would gravitate more to the January 31st deadline of 2023. I also want to bring to your attention that the former Treasury Secretary is adamantly against the extension because they think that the student loan relief would actually contribute to higher inflation numbers and encourage student loan tuition hikes. He even goes on, and I quote, "Every dollar spent on student loan relief is a dollar that could have gone to support those who don't get the opportunity to go to college. Student loan debt relief is spending that rises demand and increases inflation," end quote. And I actually do agree with him here. I do think that the student loan moratorium does eventually have to end, where people can start paying back their debt instead of adding to the inflation problem. So our main takeaway from this article is that the student loan moratorium and the student loan freeze will be extended, which is going to hurt the SoFi stock price in the short term. Now, once this eventually ends, it's going to act as a fantastic catalyst in the beginning of 2023, which could cause the SoFi share price to absolutely surge. And that's our main takeaway from this particular article. But we do have solid good news in the form of smart money and a hedge fund actually adding SoFi shares to their portfolio, to where now the hedge fund has SoFi as their 27th largest holding right now, which is absolutely phenomenal. Coatue Management disclosed a new stake in SoFi Technologies in Q2 according to their 13F filing. This particular hedge fund was founded back in 1999, and they manage more than $8.2 billion. This particular hedge fund and smart money likes to bet and invest into high-growth technology companies, and SoFi Technologies definitely fits the bill. SoFi Technologies' CEO, Anthony Noto, even remains extremely confident in the overall company, where he says, "The depth and breadth of our portfolio allows us to allocate resources towards the best growth opportunities across our diverse offerings, which has enabled us to exceed our performance targets despite continued headwinds in certain businesses," end quote. And I actually agree with him. I think SoFi Technologies is an extremely resilient company, to where even if the stock market crashes, we go into a full-on recession, or the overall macroeconomic environment is extremely negative with insane inflation, this company is going to remain very solid, just because of the customers that make up this company are very young, high-earning individuals that have very solid technology jobs, making well over 6 figures a year. Now, smart money purchased around 14.52 million shares, so Coatue purchased over 10 million shares of SoFi during the second quarter, to where now this fintech company makes up the 27th largest holding of this hedge fund. Coatue in total owns around 81 positions, to where their top 10 holdings have a concentration of around 56.86%, and we would call that their core holdings. Every portfolio, in my opinion, whether it's a hedge fund portfolio or a personal portfolio, you should have your core holdings, at least your top 10 list. For me, I actually have a core holding of an ETF that diversifies me in a plethora of various companies. However, I talk about that a lot in various ETF videos that I do, because the majority of my wealth is in ETFs and not single risky growth companies, which I will talk about later in this video. Coatue's stake actually echoes the CEO of SoFi's conviction, to where the CEO himself purchased SoFi shares on around 18 separate occasions. And I like to see this because insiders of the company believe in the company so much that they are running, that they are willing to put their own money at risk risk because that's how confident they are in their overall business model, and I love to see that. I also want to highlight that SoFi has huge institutional backing. I know lately I've made a couple videos on SoftBank selling their SoFi shares. However, SoftBank is not selling their SoFi shares because they don't believe in SoFi as a business, but rather because SoftBank themselves is going through an economic hardship where they have sold a plethora of various stocks and other assets. So in the top holdings, according to smart money and institutional investors, we have SoftBank coming in at number 1 with 63.65 million shares, Vanguard coming in at number 2 with 61.96 million shares, Red Crow Capital coming in at number 3 with 42.64 million shares, Silver Lake, which owns 31.15 million shares, and BlackRock, which has 30.85 million shares of SoFi Technologies. So overall, I would say this is actually pretty bullish news. Investors in SoFi can use the stock price pullback once the student loan moratorium is extended to average down their average cost basis for this company, as long as they are not already overexposed. And to me, I don't overexpose myself more than a 5% initial investment into any single risky growth stock. And I'll talk more about that later because that's just proper risk management that I learned in business school. But now let's move on to Palantir Technologies and talk about their PLTR stock, particularly referring to this very bearish article. Palantir Technologies, if you didn't know, is a big data and analytics company that interprets large amounts of data, which is then processed and used and given to the management of that company so they can make informed, data-driven decisions. Palantir serves both commercial clients as well as government enterprises, and right now the PLTR share price is $8.12, while stock professionals believe the company is worth anywhere between $6 and $20 at the end of the year. Now we're going to go over this very bearish negative article on Palantir Technologies because I want you all to be exposed to both the bullish scenario and the bearish scenario. And right now we're going to focus on the hyper bearish scenario where this particular author says that the fair value target of this company is only $2.50, which is absolutely insane. His main problems with Palantir fundamentally is that the underlying profitability of the company is not there. Palantir is not a profitable company on a GAAP basis, but like I've talked about in previous videos, the current projections still say that in 2025, Palantir Technologies could become profitable on a generally accepted accounting principles basis, also known as a GAAP basis. The author also goes on to say that he sees no plausible way that Palantir is going to be able to generate profits from their current sales growth, and I just kind of disagree with him in general. He goes on to highlight two main reasons that plagues Palantir Technologies, and the first one is he says that Palantir invests too much money in its sales and marketing, and honestly, I think that is a really good place to spend your money because it's much better than a lot of other places. However, his other complaint is 100% logical and consistent, and I actually agree with him because Palantir allocated around $145.8 million in stock-based compensation, which is absolutely absurd. Even though as time goes on, the stock-based compensation is falling, it's still rather high. In other words, to put this into perspective, if Palantir stopped all stock-based compensation right now, the company would literally be net profitable by around $14.4 million this year, which is absolutely insane. So honestly, Palantir could become profitable anytime they want by just stopping stock-based compensation. However, the two main reasons why they don't do this is because A, they use stock-based compensation to attract new talent and pay their engineers and software developers a very high salary. The author also goes on to point out that their guidance remains hopelessly overvalued because as of right now, the new revenue forecast for the full year of 2022 is $1.9 billion, which would represent a CAGR or a compounding annual growth rate year over year in terms of their revenue growth of 23%, which is actually very bearish and not good because management really wanted to have a 30% CAGR from now until 2025, so this is somewhat of a setback. And the author goes on to say that in his opinion, the software company is trading at a premium because their price to sales multiple is around 10 times based off of their 1.9 billion in sales for the year of 2022. And I agree with him. I would wait for this company to drop below a 10 times PS ratio or their sales multiple before you would decide to invest more into this particular company. Now, if you're very bearish and negative on Palantir, this is what this particular author is doing. He made some changes to his short position in Palantir by extending the expiration date of his put options from January of 2023 to March of 2023. And to verify this, he says, and I quote, "The longer duration of the put options reduces my capital risks while also giving Palantir stock price more time to fall towards my $2.50 stock price target. My put options continue to have a strike price of $6. Now, I am not advocating for you to short Palantir Technologies, but I do want to point out what bears are actually actually doing, because I want to give you all the bullish and bearish news and not just talk very positively about a stock that I am personally invested into. However, like all of my single growth technology companies, I don't allocate more than a 5% portfolio allocation to any single company. Right now, Palantir only makes up around 4% of my overall portfolio. So in the end, this author does think that Palantir stock could actually end up increasing for a short time, but ultimately falling because of his put options towards the beginning of 2023. He says based off of Palantir's poor quarter 2 2022 business results, he sticks to his $2.50 price target. But I want to end this video on a positive note for Palantir Technologies, even though I do agree it's going to take a long time for Palantir to actually start increasing in their overall stock prices, because I'm waiting for the company to become profitable on a GAAP basis in 2025 before I decide to add any more PLTR shares to my portfolio. And again, I only have around a 4% allocation to this particular company right now. So to end this video, I actually want to say how smart money is looking at Palantir Technologies. Particularly, we're going to look at Deuterium Capital Management, which is another hedge fund. So Deuterium Capital Management LLC currently has a top tier investment manager in my particular opinion. This particular investment manager has a long successful career in investment banking. He worked at Barclays as well as UBS by trading debt instruments, interest rate and currency derivatives, and other financial products, and overall he had a phenomenal career. So I really like how he is currently the investment manager of the Deuterium Global Dynamic Allocation Fund. So let's actually see what he has recently added as of late. And to no surprise, we actually have Palantir Technologies, where Deuterium Capital Management's stake in their overall value of Palantir grew to $980,000 or $0.98 million. And according to Deuterium Capital Management 13F portfolio filing, they have a 3.31% portfolio weight allocation to Palantir Technologies. And again, just like what I do, this is very smart of a hedge fund and smart money to do. They understand that they shouldn't over-allocate over a 5% portfolio allocation to a single risky growth company. Your portfolio should be made up of multiple fantastic companies, so you can't invest too much into one company, because then you add what's called unnecessary risk. So Deuterium has a 3.31% allocation to Palantir. For me personally, my portfolio allocation is around 4%, like I mentioned earlier, and this is actually how you practice proper risk management in a well-diversified smart money portfolio, which is what I was taught to do. Right now, the PLTR stock has a price target that ranges around $6 to $20, but many professional analysts, particularly from a Deutsche Bank analyst who lowered their $11 price prediction down to an $8 price target for the PLTR stock, and that analyst was Brad Zelnick. The analyst was not impressed with the quarter 2 report of Palantir Technologies, and he says that Palantir is aggressively spending money as well as having reduced revenue forecasts and revenue growths from here on out, which has raised its overall risk profile, which has caused multiple hedge funds and smart money and even investors to lower their overall exposure to this stock, because this risky growth stock just became even more risky. But I would love to hear your thoughts. I still think it is good news how Deuterium has added Palantir Technologies, or increased their PLTR stock allocation to around $980 million. However, they are still practicing very good risk management, and we should be learning from this in regards to how we should manage our personal portfolios. But I would love to hear your thoughts down below. Remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and I will see you in the next YT video.